The most dangerous trading habits I see on a regular basis that have the potential to destroy investment portfolios in a matter of months. I'm going to tell you what they are and how to avoid them. Welcome to the channel, Investing by Numbers. My name is Trey, and this channel is all about investing in personal and financial growth, whether it be through the stock market, real estate, or your own career path. I want to help educate you and be your biggest cheerleader. Let's get into it. All right, y'all, I want to talk about a lot of bad habits that I see all the time, especially on social media if you're following stock investing groups and other places like that. These are a lot of bad habits that mostly beginners pick up, and it's because there's so many people out there on social media and the internet that are spreading so much bad information. So this really comes down to two big categories that I like to call large cap chasers and small cap racers. So these are two areas of bad habits that I see all the time, and they really wreck new investors especially. It really destroys their portfolios over time. It leaves them feeling like they've been cheated, and it's because all the other people on the internet are telling them to do this stuff, and this is just, it's wrong. It doesn't make sense. It doesn't make financial sense. It doesn't make investing sense. It's just the wrong way to do it. And guys, I had some of these bad habits when I first started investing as well. But if you have these, it's totally okay. It's okay to be new. It's okay to make mistakes. But let's fix them. Let's look at what we're doing wrong, and let's learn how to fix what we're doing and become better investors. That's what it's all about. So let's go over some things here. A large cap is a company that has a market capitalization of $10 billion or more. These are your companies that are usually what you're going to see on the stock market, talked on the news. These are most of the companies that you hear about. Your small cap companies are any companies that their market cap is under 2 billion. That also includes micro caps and nano caps, but I'm just kind of grouping them all into small caps at the moment. Now, what we see that happens here is we're going to start off with the large cap chasers. Okay, so this is a lot of times the people that are just learning about stocks, and they're hearing about mostly these Mag 7 stocks, the Magnificent Seven. These are the 7 biggest companies in the S&P right now. Just coming into 2025, they are Apple, NVIDIA, Amazon, Meta, Microsoft, Tesla, and Google. And guys, these are highly profitable, big growth companies. And to be honest, at the right price, I would invest in every single one of these. However, when you have companies that are really popular, it's kind of rare that they drop down into a price range where I personally like to buy. However, a lot of times with these companies, you'll see really big gains. NVIDIA was one, especially in late 2023, definitely into 2024. That was the big popular stock. It was just going up and up and up, and for good reason. And what's funny is lately we've seen it kind of level out and even come down a little bit. I'll be honest, I was kind of interested in NVIDIA under $127 a share, but every time it would even get close to touching that point, it would jump back up. That area was just kind of where it looked like, okay, I'll jump into NVIDIA. I mean, NVIDIA, when they released their last earnings, they had great numbers. So that was kind of the line in the sand for me. It hasn't gotten there. Doesn't mean it won't. If it gets below 127 within this quarter, I will be looking to possibly buy some NVIDIA. But the big one right now that everyone is talking about is Tesla. Tesla had a huge run in 2020, 2021. And then, of course, the 2022 crash happened, and it just plummeted, and everyone was freaking out. And That was actually the point where I first was interested to see what was going to happen with Tesla. That was the first time after Tesla had really become a profit monster that it had tested the lows. And I wasn't interested in buying shares at that time because I really just wanted to watch it for the future. Actually, at this point, if Tesla was to drop down into the right PE ratio zone for me, I'd be interested in buying some Tesla. But that's not happening anytime soon. So a lot of people are chasing Tesla right now. Today, actually, which is what made me actually think about releasing this video, is Tesla just announced that they were short by like 1% on their delivery numbers for vehicles, and they had a decent price drop today, and they have been dropping in price the past few trading days, which is normal when you have such a run up. So what is a large cap chaser? Basically, this is the situation when you have an investor or a trader that sees the price going up, up, and up, and then they decide now it's their time to buy it because they want to jump in. They're feeling the fear of missing out. We call it FOMO, and they want a piece of the action. This is really where new investors can get hurt. Okay, let's look at Tesla right now because that's the big one I'm seeing people on social media talk about. So this is the 5-year chart. This was the big run up. I'm just going to zoom out to the maximum. Here we go. 2019 going all the way up to the end of 2021. And then we saw this big crash here. Now, we're about to look at the numbers in a minute. Tesla got, really overvalued at this point. We'll go back to the 5-year chart. It came down here, and I think it actually got to like a 35 PE or something, and that's where it went up, and then it dropped back down, I think, into the 40s here, and now just in the past few weeks it's had this big run up and made new all-time highs. And you'll see this a lot. A stock will start making new all-time highs, and all these people start jumping into it, and then when you see, all right, coming up into these new all-time highs, and then we start dropping, people start going, what the hell? Why am I losing money on this stock? This stock was supposed to make me rich. That's what we're talking about, guys. So let's look at the numbers on Tesla. Now, here's why Tesla gets run up, all right? And it's for good reason. Tesla is a monster of a company. When we're looking at the revenue numbers from the past few years, this was the end of 2018. We had 21 million in revenue. Then we went up to, in 2019, it was not that big. We're looking at a 20% increase to 24.5. And then we saw, a 30% or so, 25, 30% to 31. And then we're seeing, 70, 80% run up into 2021. Once again, that's another, 53 to 81 million. And then by the end of 2023, this was what are we looking at here? About a 20% move here too. And so we're having good revenue growth there. But everyone also is really excited about, Tesla's a disruptor. They're the EV market. Elon Musk is, he's a CEO. He's got a lot of stuff going on, and he's really good at getting people riled up for good or bad reason. But the biggest thing here is, okay, they've got great revenue growth. They've got a lot of potential for growth in the future. But let's look at this PE ratio here and remind you, the last couple of years, we're around 20 to 30% growth, which is great growth. But is it 80 PE growth? I don't think so. So let's zoom in here. I'm going to zoom in a little bit more. Okay. So this was the big crash right here. It got all the way down to, it actually got down lower than 123. I think it dropped down to like I don't know, $104 a share or something. But we see here we dropped down to 34 PE. Then we kind of came up for a little while, and it came all the way back up to a 75, 80 PE, and then we came back down here and we got down into the mid 40s, which, for Tesla being the growth company it is, I think, probably right. I mean, 45 I think was a good number. I don't know if I necessarily would have bought there, even if I was looking to buy or not. I mean, hindsight's always 2020. But still, we dropped below 50, and then we saw this big move up. But this is where people are buying this thing, and we're over 100 PE. I mean, even right now with a decline, oh my God, yeah, 212. We're over 200 PE right now. So you get what I'm saying, guys. I mean, that is so high. And when you're pushing all-time highs, they have to come through with huge numbers to keep up that kind of a PE. If you're looking at it from an investment standpoint, I'm not here to say Tesla won't give you a positive return in the next 10 years, but when you're looking at that PE ratio and that high of a valuation, there are so many other companies that are at much better levels to invest in. And that's what we're talking about here is just because it's a good company and just because it's likely that they'll have positive returns in the next 5 or 10 years doesn't mean that you should invest in them. I mean, there are so many other great companies. To be completely honest, right now, Meta or NVIDIA really look a lot better than Tesla. But because Tesla's on such a run, that's what people are buying. Let's look at Meta. Meta's a fantastic company. I'm going to come back over here and look at Meta. We are, if I'm not mistaken, we're pushing all-time highs with Meta. Yeah. So Meta is right now we're at right at $600 a share. We hit a high on the about a month ago at 623, and we've seen a little bit of a dip here. And let's look at Meta's PE ratio. We're at a PE ratio under 30, guys. So we're going to look at the income statement. We're going to look at the revenue over the past few years. At the end of 2019, we saw 70 billion, and then we had about a 20% increase to almost 86 billion. And then was this 30 to 40%? I'm doing redneck math. Y'all know how I do. But went from 85 billion to almost 118. We did see a little bit of a hiccup here going into 2022, but that was with the 2022 crash. And then look, at the end of 2023, you had a good 15-20% run from this year here. So are the numbers as good as Tesla? They're close. Tesla didn't really have this hiccup like Meta did, but still, Meta is killing it. I mean, their balance sheet looks awesome. We've got, cash on hand steadily growing. We're at 65 billion in cash on hand. Look at this. 229 billion in total assets to 76 in total liabilities. Great ratio here. They've got an A balance sheet. This is the one people should be buying if they're buying it at all-time highs. When we look at the PE ratio, like I said, we're at a 28. We're at a 28 PE. I'm going to zoom in here. Let's see. All right, yeah. And so in 2018, we had a PE, a low of just over 17, and then the 2022 crash, we got down to under 15. But right now being where it's at, this is kind of an average range for the past, 8 years. So I wouldn't call it high. I wouldn't call it low, but I would call it much better than Tesla. Let's look at NVIDIA here. NVIDIA is also one that, people have kind of lost interest in, but once again, it's the P ratio for what kind of growth they're putting up isn't that bad. We are at a 55. Like I said, they had kind of a drop there, and they got down under 50. Of course, here we hit all-time highs back at the beginning of November, and we even had a drop all the way down right. Let's see. I'm going to pull up my Robinhood. It'll give me a better look at it. But NVIDIA got right down there to the 127 spot, which was under 50 for me, and that's kind of what I was looking at for NVIDIA. Was under a 50 PE. So yeah, right here we got to, right here it shows 128, 129. But I was looking for around a 127. It didn't hit it, but I would be interested under that. Let's look at their numbers. Let's look at revenue, net income. All right. So revenue for NVIDIA, at the end of 2020, we saw right under 11 billion. And then we had almost like that's a 50% move in 2021 up to 16.5 billion. And then we saw, another over 60% move, something like that, up to 2022. We stayed kind of level there into 2023 because of the 2022 crash and inflation. And look at this, guys. Up into 2024, 61 billion. This was over a double up in revenue. Pretty awesome. This was after these numbers were coming out. I was kind of like, okay, all right, I'll play, but I haven't gotten the chance. Net income. Look at these numbers, guys. 2.8 billion to 4.3, then doubling up. So up here we had about a 30% jump in revenue, but down here we had a double up on net income. So their margins were just exploding as their revenue was growing. Now we did see a big dip here. We saw the revenue stay the same, and we did take a hit in net income. But then again, when we had over a double up here, look at the increase in net income here. It was 7x almost, 6 to 7x on net income there. So their profit margins are fantastic, which is amazing to see. Looking at the PE ratio, look at this. NVIDIA's just run. Obviously, it's, NVIDIA was a different company back in 2012, 2014. We've kind of come into a new range for the company. Even back here in 2019, we hit a 21 PE at a stock price of 356. But in most recent years, we saw in 2022, it just got under 50, guys. This was a big crash, and to see it just get under 50, and then we're trading like right there at the beginning of 2024. We're trading it right around 50, and then it did get close to 50. Like I think 50 was going to be right around $127 a share. That's why I was looking at that. It's not a bad place to be when you're seeing those kind of numbers with that revenue growth. With the profit margins they have, NVIDIA is a pretty great company. But that just goes to show you guys, beginners aren't looking at the fundamentals here. They're not looking at these numbers. They're looking at what they think is going to give them gains. And that's the wrong way to play the game. If you're going to be a large cap investor, don't be a large cap chaser, guys. This will wreck your portfolio every time. And if you do get a gain, what are you going to get? 5-10%, before you call it a day. Once you realize what you're looking for fundamentals, both of us know that you're not going to get a ton before you take a big drop. And the problem is, if you're a new trader or an investor, you're not going to understand why the drop happens. And when it happens, it's going to freak you out and you're going to sell for a loss. And that's why new investors, they get wrecked when they listen to everybody else. Don't listen to everybody else. And that's what's going to move us into our second place. It's the rebels of the new investors, the small cap racers. These people think a little differently. These are your rebels of the new investors. They're the ones that are looking for the unknown stocks that they think are going to give them huge, 20 times their money gains. These are usually companies that no one else knows about. So the people that are buying these stocks feel special because they feel like they found something that no one else knows about, or one of their friends or someone in a stock group tells them about this other company no one's talking about, and they just believe this person because the stock is maybe down so low. A lot of times these stocks are just a couple dollars a share, maybe under $1. They're penny stocks. And they think, oh, I'm going to invest in this and it's going to go up over the next few years. And it's going to make me millions of dollars with just investing a couple thousand or whatever they're doing. And I call these small cap racers. And this is another way to get completely wrecked, because not only do a lot of times they're buying these stocks after they're already going up, but these companies a lot of times end up going bankrupt, or they just keep going down and down and down over years. I've seen so many times on the internet people posting their losses, a 90% loss, because they bought these small cap companies when they were, going up 100% in a day, because that company might have, had a purchase for $100 million of their product or whatever it may be. So their stock just starts jumping because everyone thinks that this company now is just going to go through the roof. The problem is, most of these companies, these small caps, a lot of times these companies are not profitable. And when a company's not profitable, you're taking a gamble, especially if their net income isn't going up and it's actually getting worse. If you got to know what you're looking at, you got to know. And let's look at some examples in a minute. Okay, so when it comes to small cap chasers, I went through a Facebook group I follow that's an investment group, and I saw someone posting about, this was just one that popped up, and this is Big Bear AI Holdings. They're a AI software company. To be honest, I didn't look too much into their information on what they do, but I did see where someone was posting about, buy the stock up, they're about to explode. So of course it was exactly what I was looking for. And here's their 5-year chart. Obviously they IPO'd in April of 2021 and just crashed. All right. And we see these spikes here. Honestly, it doesn't really matter much to me. I'm not a technical trader. I know a lot of people are, but I look at fundamentals. But and now we've hit this recent run up here. And so now people didn't care back here. They didn't care when it was low. But now that we've hit these huge gains just in a matter of a couple months, $1.75 up to $4.21. These are big gains, but people weren't buying it back here. At least the people that were talking about it, now they're talking about now that it's already run up, 200-300%. And so, now we do, it's up 85% in a month. And so of course people find this and they think, oh my God, I'm about to make tons of money. Guys, this is a gamble. This is just another one of those instances where I can't say that you won't make money on the stock. I can't tell the future. All I can look at is the numbers. In this channel, investing by numbers, this is how we do it. Revenue and profit. All right, let's look at the revenue. Obviously, they've only been around for about 3 years, so we're not going to have a ton of data to look at. Quarterly revenue, this is back here in 2021. I mean, in a sense, what's that, 36 million, and this past quarter was 42. So in 3 years, we've seen, a growth of 20%. I mean, we have all these up. This is inconsistent revenue growth, guys. I don't like to invest in a company that's got a lot of up and downs, and I'm not seeing steady upwards growth over the long term. It's just not something I want to invest in. Net income. Are we profitable? Is this company profitable? No, it's not. We just have negative net income, which, here's the thing. I'm not saying that you can't make money off a company that's not profitable, but we want to see steady growth that's soon to turn positive. If you're going to invest in a company that's not profitable, we really have to have the company prove themselves to us. We got to see really great numbers that are consistent, that we believe is going to flip into profitability, anytime soon. But at the same time, guys, if we're investing in a company that's unprofitable, we're keeping our position very small in reference to the rest of our portfolio, because if a company's not profitable, we're at a much higher risk for them not to give us returns in the long run. It's very possible that they'll never find profitability and eventually go bankrupt. So when a company's not profitable, obviously a PE ratio doesn't matter. We're going to have a 0 PE ratio, and that's what we have. So, we really can't use that to our advantage. We could look at price to sales, which, I might look at sometimes, but if you're a newer investor, I don't really recommend using price to sales. This comes with a little more experience. But even if we look in here, since 2020, we're at 2022 here, but I mean, we've seen a low of 0.55. We saw a low of 1.37. This thing's high right now. People are buying at high levels, and this thing could just go backwards on us, just like it has in the past. I mean, spike, reject, spike, reject. I mean, yeah, it did go above this last high, but the question is why invest in this? I mean, you have so many other companies out there that are putting up fantastic numbers, and you can't just because it has gone up a few 100% in the past few months, you have so much more downside. And the biggest problem with this mentality is, and this goes for the large cap chasers, this is the small cap racer here, but with both of these situations, if you have a couple of lucky wins with either of them, you're setting yourself up for long-term failure, because most of the time, these aren't going to work out. Most of the time, you're going to end up losing money on these situations, or you're not. If you make money, what's going to happen is you're going to do the same thing again and then lose it, and you're going to get confused. You're not going to know what's up and what's down, and it's just a bad situation. And guys, this is what I'm preaching here, is that work on fundamentals. Let's look for great companies that are profitable with steady revenue growth that we trust will bring us returns for the years to come, and we feel safe, and we can buy more shares as those stocks drop, and we're not just worrying that, oh man, I mean, is it overvalued? Do we buy at the top? Is it going to crash? Is it going to go down, below these levels? You're not worried about any of that when you trust the numbers. And so, that's all I want to talk about here, guys, is just, this mentality here can be very dangerous. Large cap chasers and small cap racers. These are some things I fell into when I was a new investor, and it didn't end well. if you watch my first video, I lost it all, is what the thumbnail says. The first time I ever invested in stocks, I bought some penny stocks and thinking I could make big returns, and I just lost. It was like $1,500. I lost all that money. And then into 2022, even after a dip on Shopify and Zoom, I was invested in, after they had dipped quite a bit following their highs, I invested in both of them, and their PE ratios were pretty high still, and they went down and down and down. Now, those companies had great fundamentals behind the business, so I did buy more shares as they dropped, and both have worked out pretty well for me moving forward. I'm still down on Zoom overall, but Shopify has made up for Zoom by far. These are lessons that I want you to learn from my mistakes. Please don't listen to other people on Facebook groups. If people you're watching can't prove to you that they understand what they're talking about, if you're not seeing their personal portfolios and they're not talking about revenue growth, net income, profitability, valuation being undervalued versus overvalued, or even a fair value, guys, don't just follow these people. They'll get you in trouble. You will lose your hard-earned money. This channel is all about growth. It's all about long-term hard work, grit, growth. Work on yourself internally. That's one of the biggest things you can do. I will be releasing a video coming up, maybe tomorrow, about my 2024, which was the best financial year I ever had, but I also lost my father during 2024, and it was a really difficult year in duality with being my best financial year. And just kind of, I want to talk about how that's just a crazy place to be. And if you're an investor in yourself, in your portfolio for retirement, or even your home, if you own your own home, that's an investment, and to keep putting money into it so it maintains its value. If you're spiraling out emotionally, you will not be able to perform at your max level, and you possibly have the chance to make really bad decisions if you're in a bad mental space. And I do want to get more into that with this channel. I really believe in a healthy emotional mental state. That's such an important thing, especially if you run your own retirement portfolio. If you are an investor, you want to keep a very peaceful-minded mentality, so you understand what your emotions are underneath the surface, and you can make really educated decisions on your, financial growth, personal growth, career growth moving forward. And that's what this channel, Investing by Numbers, is about. And I'm glad to have you. Thanks for joining in. Please like and subscribe. We're still a very new channel, and your subscription and your smashing the like button, as they like to say, of course, it really promotes the channel. And I want to be your biggest supporter, and I want to see you grow. Comment below. Have you ever fallen into any of these situations where you've chased some large caps, or you've raced some small caps? I mean, I definitely have. Tell me about your previous ordeals. Tell me what you'd like to see on this channel. Bring up some stocks that you're looking at. Feel free to drop me a message in the comments. I'd love to see it. As a new channel, that stuff is really cool to see. I've already had more views and subscriptions on this channel in the last 9 or 10 days than I would have expected. So this is really cool. I'm really enjoying this. If you want to know more about picking great stocks that are safe and have plenty of potential growth for the long term, I've got a great video I'm going to link here at the end of this video to help teach you how to find great stocks to invest in. And I'll see y'all soon. Thanks.